Hey everybody, Boris this week at Forex. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, pound dollar for Sep 16, Sep 20th, 2019. It is Fed week. That's what's going to be the big driver this week as the Fed takes center stage Wednesday in New York. And all eyes, of course, are going to be on dollar yen as well as Euro dollar and pound dollar on a complementary basis. And it's really going to be the big story of what the Fed says, because at this point I think there's very little doubt the Fed is going to do nothing more than just a 25 basis point cut. The more interesting question will be if the Fed suggests that this is perhaps the final cut, because certainly U.S. data has been coming out of a tail dive. Consumer has been relatively strong. Payrolls continue to be relatively good. Retail sales were good on Friday. There's just nothing here suggesting right now that we are tapering off into a serious recession for the time being. And Trump is doing everything in his power to keep it pumping. Add to that the fact that there's now sort of a nice a rapprochement between China and the U.S. And it just creates a very positive background for risk, background for growth, and sort of a hope that the Christmas season and the close of the year essentially is going to be a lot better than everybody thought originally. And that in turn provides, I think, just very positive flows for dollar yen. We'll see how technically it certainly gave us a signal to the upside this week. But barring some incredibly dovish commentary from the Fed, which of course Trump is going to very much try to force him to do, I doubt that you're going to see much of a decline in U.S. yields off their commentary. And then in turn, of course, is going to be positive for U.S. dollars as we go forward. When we're looking at the levels, what's interesting, ironically enough, is that Euro, despite all the incredible roller coaster rise this week from down to up, actually stayed in the exact same range as we had last week. It's still a 109, 111 range. And we still got rejected at the top and we still got bought at the bottom. Not much on the calendar this week for us to really guide ourselves forward. So it's really going to be a very technical trade. We're going to have to see whether they can push it through the 111s and take us higher on just kind of the general big theme in the Euro land now is fiscal spend. That's really what the market is going to be focused on. It's universally clear that the economy in all of the Eurozone has slowed down materially, that we are in a recession in manufacturing. We could be on the verge of a recession all across the region if things don't improve much. And the market is really looking for a big shot of adrenaline from demand side, which means it's got to be a fiscal shot of adrenaline. It's slow, it's tedious, it's European, it's bureaucratic. But if there is policy tilt towards that direction, Euro has made the bottom for the time being, I think, and that's the key thing. That's what we're going to be watching as we go forward. Dollar yen, I'll show you on the charts. Really took out some very high numbers last week, and it's just really on path towards the 109, 110 level. And of course, cable, unbelievable run. I think I'll just simply save my commentary on cable until we get to the charts because it's a story in and of itself. Looking at the calendar is actually quite full of UK data. We have the CPI, RPI data at the front where we're kind of bullish at data. And then we have, at the end of it, retail sales where we're bearish. And we also have the Bank of England, which is going to be essentially stationary and stand down ahead of all the political turmoil that is going to involve this month. From a political point of view, the only thing I think you can take away from the Brexit drama at this point is that the market is viewing some sort of a deal as pretty much a done deal. Now, this is a very dangerous assumption, but it seems to be the operating assumption right now. The operating assumption here is this. When you look at the negotiated deal, it's actually a very good deal for UK. They gave them access to the market economically. Very little changes between what they have now to what they have then, and they have pretty much full autonomy politically. The big stumbling block is Northern Ireland. And if you are a true Brexiteer, and all you care about is making sure that England leaves EU control, you could care less about Northern Ireland. I mean, Northern Ireland really, from every perspective, couldn't matter less to the United Kingdom, economically, politically, from all those things. It's just a matter of pride at this point, right? The control. So it feels like this week the market decided that all the talk to the contrary, they're going to shove the whole Northern Irish backstop issue under the bus, as we say in America, meaning they're going to sacrifice the backstop issue in order to get the Brexit issue. Whether that's true or not remains to be seen, but that seems to be the hidden bet that that I took away from the market this week. That's why the market is rallying so hard, because it's essentially anticipating the fact that, talk what may, the deal is already done. They're going to sign the deal with the backstop as is, and sacrifice the Irish. What a surprise. So that seems to be the play. But again, if I'm wrong, it's very possible we could have a no deal and a complete unwind the other way. The other thing I was going to say is that's sort of interesting when you think about this politically, is if there is no deal, the danger of a second referendum. The second referendum is the biggest nightmare for Brexiteers, because there is an incredibly strong chance that they will lose it. So that means their one and only chance to get out of EU will be lost forever. And so to them, the calculus is throw Ireland overboard, keep Brexit, or take a gamble on the possibility of a second Brexit. I think that's going to be the really dangerous point. I mean, of course, they all want just simply hard Brexit and keep the deal as is and a spin out of Europe. But that's really a very bad decision on all fronts, and certainly one that's not going to be tolerated by the populace at large. So it'd be interesting to see how all the political Machiavellian machinations go on there. But that's really how I'm reading the whole story, and that's why you saw this massive move in cable. Let's take a look at the charts and just see how the charts are shaping up. First, looking at the euro. So euro, still the same thing. You know, we're like 111, 112. We rejected the lows, we rejected the highs, right? We are just kind of bouncing around, and we could spend a little bit of time consolidating. Taking out the 111s by no means, means that we're done, but it does suggest that maybe the double bottom is set. And then it's a very long, hard slog through 12s, 13s. There's a lot of overhead resistance all across. But really, you need to have a close above 111 to confirm that that the double bottom is kind of set at this point. Then you trade against that double bottom on a longer-term basis. Cable, on the other hand, unbelievable move. What's even more amazing about cable is that they snuck the 25s right at the close at around 1600 U.S. time. They took out the 25 handle in cable, the big figure, and then retreated a little bit off of it. But bottom line is that they really try to probe this whole area. Now, what's interesting about this area, of course, is that this is a pretty serious resist area. 25, 26 is a big, big chunky area. So to me, the huge extension that we've seen in cable here, essentially this vote of confidence on a soft Brexit deal, could run in just into a natural technical resistance and some profit taking as we go forward. We have the other political thing I think this week that we have is the UK Supreme Court that is going to decide whether suspending Parliament was unconstitutional or not. I don't think at this point it really is a major issue. So I don't think it's going to be worth much as far as, but it could be an excuse to take some profits if they do rule that it was indeed unconstitutional. We'll have to see how the whole trade outs. Just looking from a price perspective, if I get just a little bit bigger here, you can see that this is quite a big extension, right? I mean, cable makes these big extension moves, but then it tends to reverse itself. And of course, a lot of these reversals are very political in nature. Positive news, negative news. I do think that 25 to 24 could be a little bit of a chunky area, or 25, 24.50 will be a little bit of a chunky area as we try to consolidate maybe for a day or two. 25.50 would be my perfect short area. So I would be short 25.50 with like a stop above 26 just for profit taking, not because I'm negative cable, but just for profit taking. And also because if all this optimism is mislaid, if there is now a serious danger, we could just go right back down. I mean, we've seen this movie before. It's a roller coaster ride here. So you have to trade accordingly when you're looking at the charts. And then finally, let's take a look at the yen, which did make a significant break here. We took out the 107s. That was a significant move. And the yen really is kind of now a vote of confidence in the U.S. economy, U.S. consumer. We're now essentially the 107, 108 trade, whereas before we were really 106, 104 trade for a very, very long time. We broke to these fresh levels. The next box of resistance is this, of course, the 108 to 109.50 right over here. And you really would need to have an incredibly hawkish Fed next week to kind of give it that big rise through the move here. But I do think there's a reasonable chance here. 108 to 109 is going to probably meet quite a significant amount. Look at this overhead resistance here. It's probably going to meet some some resistance over here. But from here to there, we probably have a little bit more extension, especially if U.S. Yields continue to rise and we get a general modestly positive view of the global economy as we go into the final quarter. So a lot of the hard work in the end has been done. Now it's very possible for us to kind of stall, come back. A truly negative turn of events would be if we break the 107s and close below that. Then that would really suggest we have a false breakout and the market is once again starting to price a risk-off environment. But for now, when you're looking at the charts, it's risk-on, baby, as far as the dollar goes. Wish you guys the best luck, the best trading. Boris Landsberg, over and out.